Hello, everybody, and welcome to the show. Today, we're going to be talking about commercial insurance and what's going on with the state of it in Florida. Before we get started, and I introduce my host, Paul Finley, I want to read to you some excerpts from a report that I got from NOAA regarding Hurricane Ian that'll help kind of set the stage, I think, for the rest of this podcast. So, bear with me here, and let me get this little intro out, and then we'll get down to business. In the United States, Ian was responsible for at least 156 fatalities, 66 of which were considered deaths directly caused by the storm. Storm surge was the deadliest hazard, claiming 41 lives. In central and eastern Florida, widespread historic freshwater flooding caused destruction and significant damage to many structures and roadways, leading to over 250 water rescues. There were 12 different fatalities attributed to freshwater flooding in central and eastern Florida. According to NOAA National Centers for Environmental Information, Ian caused an estimated $113 billion worth of total damage in the United States, making Ian the third costliest United States hurricane on record. Of that 113 billion, 110 billion of those damages happened in Florida, making Ian the costliest hurricane to ever affect this state. In Fort Myers Beach alone, an estimated 900 structures were destroyed and 2,200 were damaged. In Lee County, 52,514 structures were impacted and 5,300 structures were destroyed. Another 14,000 received major damage. In Collier County, 33 buildings were destroyed and over 3,500 buildings sustained major damage. In Volusia County, 40 buildings were destroyed and over 1,300 structures were damaged. The Florida Department of Agriculture and Consumer Services estimated that $1.1 to $1.8 billion in losses due to flooding and wind damage. I'm sorry, let me reread that. The Florida Department of Agriculture and Consumer Services estimated that there was $1.1 to $1.8 billion in losses due to flooding and wind damage to the state's crops and farming infrastructure. An estimated 9.62 million people lost power in the United States due to Ian between the 28th of September and the 1st of October. And storm waters that were exiting back into the Gulf of Mexico carried debris, fertilizer, and other pollutants. Scientists from NOAA's National Centers for Coastal Ocean Science tracked a harmful algae bloom in the days following Ian off the coast of the southwestern Florida, and researchers from the Florida Gulf Coast University also noted significant damage to the artificial reefs in the region. So, yeah, I mean, just to summarize, Hurricane Ian messed up a lot of stuff, and it's already obviously impacted a commercial insurance market that was already, arguably on the ropes prior to Ian happening for a variety of reasons that we're going to get into. But I don't want to do that alone. I want to introduce my host, who's an expert on commercial insurance. His name is Paul Finley. Paul, introduce yourself quick.
All right. Again, Paul Finley. I work with Atlantic Pacific Insurance, and I'm a Florida native. I'm 59 years old, been here the whole time, been through several hurricanes, been through some interesting insurance markets. I started in my journey in the insurance business back in 1987. Hold a life and health license and also a general lines license, which is a 220 license. I'm a certified insurance counselor, taken tons of courses on advanced level on insurance. So, I know my stuff, for the most part. It's an interesting market. We saw something similar as far as what's going on in our current market back in the 2006, 2007 marketplace. So, this is a bit of a repeat. Is what we would call in our industry a hard market for commercial and residential property in Florida.
Got it. And can you, for lay people, before we get too deep into like Ian and the actual state of the market, can you kind of talk about the lines of coverage that you provide? And I may have some clarification questions into that too, just to give people like a commercial insurance primer, I guess.
Yeah, I write everything from general liability, commercial auto. I focus in the commercial market. My agency writes all lines for personal and commercial, but I write everything from their commercial auto to their workers' compensation, everything in between, bonds, cargo policies. If it ends in insurance, basically, I write it. I also take care of my clients' health insurance, all that stuff. I like them to know one phone number, and that's mine.
And there's here comes my daughter. Hang on. We're going to have to edit this part out.
Okay.
I'm just going to pause. Okay. And just for the lay people out there, Paul, can you explain, there's different kinds of insurance that everybody needs. There's general liability, there's business liability, there's BOPs, there's umbrellas. What's the difference between all of those?
Well, basically, if you break it down so if you were to go to a steakhouse and get your steak and get your main course, and then you get all the a la carte uh, items that you add to your meal, basically, you fundamentally, insurance coverage typically starts with property. So you're insuring your client's business from the building and to the contents, the stock, everything. So that's your property coverages. Your general liability coverage is coverage for third party coverage, meaning that if your product harms a third party or if someone is on your property, slips, falls, that sort of thing. Or if you're a contractor while you're out there installing something and you hurt somebody on the job site, or your product itself after you leave hurts somebody or hurts property. You either do property damage or bodily injury. So that's your general liability. Workers' compensation is simply your workers. If they get injured, it takes care of the medical bills and lost wages of your workers. And then your business auto covers your auto insurance, the business use of your autos. And that's basically it. And
Is a
then,
business owner's policy and an umbrella the same thing?
no, a business owner's policy is like a package policy, very similar to a homeowner's policy. Hang on one second.
Yep.
But a business owner's policy, very similar to a homeowner's policy. And how it's designed is to package everything so it's easier for the business owner to purchase all the coverages they need that go with the business and then not have to buy them on an a la carte basis. So it's cheaper for them to go in and purchase a business owner's or BOP policy, and they're able to get all these additional coverages, such as they get their building covered, their contents covered, and then they can also add business income and then accounts receivable coverage, crime coverage, as well as the general liability. And that gets thrown in with it. And it's a great product to have. And if you can find a product that will be written on a package basis like that in a BOP format, it's typically to the great advantage to the customer.
So BOP, it sounds like it covers a lot of different stuff. So then what's an umbrella policy? Because that
An
sounds like
umbrella
umbrella
policy
sounds like
is
it's
specifically for liability. So an umbrella
got it.
policy is something that fits. Think of it as it goes over and above on a business owner's basis. It goes over and above your general liability, your auto liability, and the employer liability within your workers' compensation policy. So let's say you have a business owner's policy and you own a coffee shop and your landlord says, you know what, I need you to have $5 million of per occurrence limit. And your business owner is going to go, well, how do I get up to that? I have a BOP policy, and that BOP policy has a $1 million per occurrence and a $2 million general aggregate. What the general aggregate is the bank account that I pay all the claims out of on the general liability basis. So I can pay up to $2 million in total losses on the general liability basis, but no more than $1 million at a time. But my landlord says I need a $5 million limit total. So how you would solve that problem for the landlord and for your customer is you would give them a $4 million umbrella policy or excess liability. And that excess liability sits on top of that 1 million to give you a per occurrence limit of 5 on the general liability, a per occurrence limit of $5 million on your auto liability, and a per occurrence limit of $5 million on your employer liability.
So it's not instead of, it's in addition to.
It's in addition to.
Yeah,
And
I
that
think a
also
lot.
goes the same way on your personal umbrellas, where it's going over and above the personal liability that's built into your homeowner's policy and over and above the auto liability, the business, the bodily injury, property damage portion of your auto liability policy, and it goes over and above those to give you additional coverages.
Great. In doing research for this show, I'm going to throw you a curveball question, and see what your thoughts are. One of the things, when I was doing the research for the show, that I found is usually not covered by a business owner's policy, a BOP, is acts of pollution. Um, the Biden administration this year has outlawed incandescent bulbs, which we all know are essentially polluting products. Um, what exposure do businesses have, for example, building owners or property investors that continue to use incandescent bulbs? I mean, I can't imagine that there's going to be incandescent bulb, police walking around checking to see whether or not you changed out your ballast to LED or whatever. But are you aware of any impact on the insurance side that this policy, might have, or exposure that business property owners might have?
Well, in the current insurance environment for business or building owners, and specific, I'm just going to lump the whole group into building owners, whether they are the landlord or the owner of the property that is occupied by their own business. But the property owner, most of your policies and the pollution damage would be typically covered under a portion of it under the liability portion of the policy, and then there's another pollution section under the property section. Most of the policies written in our current environment in the state of Florida are going to have total pollution exclusion endorsement. They're also going to have a fungi endorsement where it's excluding fungi. So basically, they're running from your toxic mold coverage or any exposure to that, and they're also running away from any of the pollutants that a building owner may bring onto the property. But then you also have the exposure of subcontractors that come to the property to do work on the property. So let's say the landlord, or excuse me, the building owner hires a gentleman or a company to come in and paint the interior of, let's say, the lobby of the building. And let's say the person uses a type of paint that gives off an odor, which causes the lady in the law firm on the second floor to have extreme headaches. That's a potential problem for both the landlord and the painting contractor. So pollution liability coverage is an important coverage to look into for a building owner and also for a contractor of any type, because like I said, almost all of those policies have an exclusion called total pollution exclusion endorsement. The only ones that will not have that will be your business auto, and then also if you have, like, let's say, a heavy equipment operator, they're going to have some pollution coverages, and basically those pollution coverages are narrowed down to basically pollutants that can come from the equipment or the autos in the event that they break down.
One final question before we go into the Florida and the Ian stuff. You and I work closely together with various, commercial clients, leases and purchases and all that stuff. Do you think, I mean, this is kind of a softball question here, I think, but should, I just want to say out loud so everybody can hear this. Should someone have their attorney, let's say, somebody buying a building, for example, should somebody have an attorney read over the policy before they sign it and bind it?
Well, typically getting a copy of the policy, what you would have to do is get a sample policy. Most of your property policies are written with a relatively, like, 95% standard level of language as far as their coverage format, as far as definitions, things like that. What you have to watch out for are the endorsements that get stuck in the proposal. And what they'll do is they'll have this list of endorsements stuck to the proposal, whether it's general liability or property. And your agent needs to go through those endorsements, make you aware of any endorsements, such as the total pollution exclusion endorsement, make you aware of those endorsements that have real life, when I say real life exclusions, meaning those claims aren't obscure. They can happen. And your agent needs to offer solutions for that. One, to protect his client too, he needs to be making those offers also to protect himself. But because that's the level of professionalism that agent is going to be held to, you need to make, part of your job, especially if you tack the little risk advisor tag on your title on your business card. Part of your job is to go through that and make sure your client is being taken care of, and get in front of the curve, as be active as opposed to reactive. But as far as having an attorney review it, I've had some clients that have had to do that, to making sure that their policy meets contractual requirements. The insurance policy is a contract, and so there are clients that do have that are clients I've had in the past that do have their business attorney review their policies, and I've had situations where those attorneys would then call me, go over those policies, and voice any concerns that they have for endorsements, and then find a solution for those endorsements. So it is not an uncommon step.
Gotcha. That was actually very informative. I wasn't even thinking about the fact that you actually don't get the policy until after you sign. It's been a while since I've had my IT company, and I had to go and shop, shop for a bot policy and all that kind of stuff. But now that you said it, now that you mentioned it, I'm remembering how the process works. All right, let's get into Ian and the state of the Florida market. And for the listeners to this show, you should know. I mean, this should have always been on my radar of topics that I wanted to get in terms of a show I wanted to get produced, but it actually hit near and dear to home as Paul and I were working on a particular purchase deal, which is actually, I believe, going to close this Friday. Thank God. But we were shocked. The my buyer in this deal was shocked at the very high levels of I think it was windstorm insurance, right, Paul? Who
Yeah.
that he was getting quoted, and this has nothing to do with Paul's an insurance guy. He's just shopping the market and quoting. It has to do with what happened with Hurricane Ian. It has to do with uh, you know living in Florida and the state of this crazy insurance market, this highly litigious insurance market, and that's what I want to get into. The point here is to educate property owners, and buyers and tenants about the issues of the insurance market here, and also, hopefully let us know if there's any sense of hope on the horizon for these rates to come down, or we're just going to cover all that. So, I mean, I've got some talking points, Paul, but do you have anything you want to bring up?
Well, yeah, on the commercial side, on that market, and it also drives the homeowners market, but
Right.
the big driver of the entire thing is what they call the reinsurance market. So
Yeah.
think of an insurance company as hedging bets. And so, in order for them to, shall we say, diversify their portfolio of the risks that they're covering, what they'll do is they will offset that debt, or excuse me, those claims, potential claims, offset them to, or transfer them to a reinsurance company. So that's an insurance company for an insurance company. And when they do that, they pay a premium to get that reinsurance policy or that coverage for their large book of property coverage. And so when they do that, they pay that premium for it. But what was happening, let's say 10, 15 years ago, was that we had a larger number, just more players in the international reinsurance market. So folks like Berkshire Hathaway and Allianz and other companies out there, other companies that are in the Chinese market, things like that, uh, those markets have gone out and basically swallowed up smaller reinsurance companies. And so there's fewer players on the in the reinsurance market. So that reinsurance market, since it has fewer players, those players are covering natural disasters all over the world. Specifically for the United States, they're getting beat up with the fires in California, and then they're also getting beat up by Ian. The data on Ian, the data that got crunched out with Ian, insurance industry is looking at it and saying all total losses, it ranks third behind Hurricane Katrina and Hurricane Harvey at $115.2 billion in total losses. Now, not all of those are insured, but a large portion of them are. Every one of those vehicles that was flooded and destroyed in Hurricane Ian, all of those cars are part of the coverage that they have. The comprehensive coverage covers flood. So all of those vehicles were covered. A large portion of those properties were covered for flood. They would have been covered for private flood. All of those, that hits the reinsurance market. So that market has knee-jerk reacted to Ian, but also other storms. They took a beating in 2017 with Harvey. They took a beating with other storms in recent years. So in the last 5 years, you've got Ian, you've got Maria, you've got Harvey, you've got Ida, you've got Irma. All of those storms were double-digit billions, if not triple-digit billion-dollar events. And then also, because some of the research I did for this podcast, I was surprised to see how much of the losses were going on because of the California fires. So those markets, those reinsurance companies, they're running out of, or basically they have to rebuild their reserves. Now you also got to understand they take the premium from the insurance companies, they reinvest it in the marketplace. So everybody's looking at the stock market, but they are investing in bonds and things like that. The bond market's been adversely affected as well. So by the Fed raising rates and things like that. So it's hit their investments as well. So the combination of all of those has caused the reinsurance premiums and reinsurance treaties to be escalated in a large basis. We're seeing 20 and 30% increases in the reinsurance market that what they're offering as far as in their renewals. That translates to 20, 30% or more premium increases on the street to your building owners. As an example, one of my building owners went from an $11,000 premium to a $26,000 premium because of different factors. The construction that she had, because the reinsurance markets are coming back and saying, based on what we're looking for, we only want newer buildings that are masonry non-combustible, which is construction class 4 or better. So we're looking for the best level of construction, the newest buildings that have the best building codes, that have the best protections, such as shutters and impact glass, all that fun stuff. And that's what we're looking for. That older stuff that you've got out here, and in South Florida, you've got some historic stuff. And they're not looking for any frame construction, joist and masonry. Yes, they'll accept that, but at a premium. And so that's what I'm finding is that those property owners are really taking a beating currently in the marketplace. So as an example, that one property owner, $11,000 was for her package for her commercial building. That situation, it's going to be an 18-month run until we see relief for those types of situations.
So one of the things I have in my notes here, Paul, that I thought was actually shocking, getting back to the reinsurance, I couldn't believe this. And tell me if this sounds accurate. I got this from I think it was a YouTube channel of a CBS News clip that they were interviewing one of the state legislators. 50 cents of every dollar of premium you pay goes to reinsurance. Is that true?
That may be true because basically, especially in the homeowners market, reinsurance is really paramount because the homeowners market in Florida is written by a large number of smaller companies that have offset their risk to these reinsurance companies on a large basis. So if they get into a situation to stay competitive, they have to keep their operating costs down below 30% of total premium and then losses on top of that. So yeah, it could be that high for some companies.
And you said something else. I've learned a new phrase here: class 4 masonry, non-combustible building. Okay, so as soon as I hear that, I just Googled it real quick. The next thing I think of is, okay, how does this affect other markets? So are the insurance companies saying, hey, just nationally across the country, we want buildings made of cement, no more wood? And if so, has there been discussions about how this impacts the lumber industry and construction and all that stuff? I'm going a little outside the fence of Ian here, but it just occurred to me that could have a huge impact on the, some other industries if we end up going that way.
Well, if you look at the top storms that are that NOAA listed on what those storms did dollar wise, the number 5 storm total loss was Hurricane Sandy that hit New York, New Jersey area,
Yeah.
and Hurricane Sandy was just a Category 1, and it caused $85.2 billion worth of losses. So a Category 1 hitting the state of Florida. I mean, we have tropical waves that are as bad as as a Category 1, or almost as bad. I mean, I know people that don't even bother putting their hurricane shutters up if they get a Category 1. I'm saying not to do that, but it depends upon the building code in your area. So after Andrew, which was basically like a 50-mile wide tornado, 200 plus mile an hour winds, when it hit Homestead, devastation was all the way through Monroe County. Homestead area, Miami-Dade County, areas in Fort Lauderdale. Everybody in that area felt it all the way through to the West Coast when it traveled to the West Coast. After that storm in the early 90s, Florida went through a step where basically everything was Miami-Dade County hurricane rated shutters, impact glass, and they set certain building standards. So everything after early 90s, mid 90s was being built at a higher grade level. And then everybody was also building things to meet, those wind requirements, because, Andrew wasn't the first hurricane we had in Florida. But so you'll see a lot of buildings, even older buildings built in the 50s, that are built on masonry non-combustible. But you'll still see joisted masonry, which is CBS or brick walls with a wood truss roof. You'll still see those, and basically every home in the Southeast Florida is pretty much joisted masonry, meaning concrete walls and the wood truss roof. You do see some frame construction, and it's funny. You go down to the Keys and you see those old homes down there that have weathered several storms, and they're frame construction, but they were built different. They have Miami-Dade pine and stuff like that. But how it affects the building code, certain building material goes through shortages, and the supply chain, between the supply chain issues and different building shortages, it's kind of like the perfect storm as far as increasing rates, capacity, the reinsurance issues, all of that. So it's not here to stay based on my experience over the decades, but I think we're in the first 6 months of it, 6 to 8 months of it. I think we've got maybe another year of it. But once we get through, let's say, this hurricane season with, maybe some minor hits, that's it. You'll start seeing relief in the marketplace, because people are like, we'll start seeing that profit available, and they'll jump back into that market. That's typically what I saw we had a similar situation back in 2006 and 7, where we had a very similar situation to what we're going through now.
You're saying other insurances that have left the state will come back?
Yeah, you're going to see players come back into the marketplace, because the pricing right now is extremely high. But prior to this current hard market that we were in, or that we're currently in, rates were really good. But but that happens over time, to where basically, because that's the big driving factor that insurance company utilize. What's one of the tools they utilize to grab market share. They'll use price of their coverages as to grab that market share, and then they have the actuarials that'll tell them that if you come in with this pricing, you'll get this much marketplace. Then you can raise it by, let's say, a 5% to a 10% level, and keep a certain percentage of their market. And typically, the incumbent has a great advantage on keeping business with a specific market. And you'll typically have, I know in my book, I have a 96 to 97% renewal rate. So I keep 97% of my clients from year to year. But I typically keep those as long as possible with one market. So, or with a particular market, unless that market goes through a disruption, and then I have to move the client to a different market. But right now, the entire marketplace for property is disrupted. So it's like I said, I think we've got at least another 12 months of this current market until we start seeing some relief.
So I'm glad you brought up the other insurers coming back to the market. Citizens, which I guess is the insurer of last resort. Oh, here's my phone. Turn that off. Citizens, which I guess is the insurer of last resort, whose rates are set by politicians and not really the market. They've doubled in size over the past year or two. They had about 10,000 policies a week, and their policies, because they're set by politicians, generally run 20 to 30% cheaper than what the market should be. So when you're talking about insurance carriers coming back, I guess my first question is, why would they when you can just go to
Well,
Citizens and get a cheaper policy?
with Citizens, you're looking at a marketplace where there were some flaws in the policy or in the statutes that made it to where a certain marketplace, attorneys were basically going in there and between attorneys and public adjusters. So the public adjuster would go out there and solicit the business, and it really affected the homeowners market, the private homeowners market. So what they would do is they would go and find a home that went through a hurricane and was exposed, and then they would find a couple loose tiles, and then they would get somebody that would be willing to state what the potential losses were, and then they would say, well, you need a roof replacement paid for by your insurance company. So I've had one of those scenarios that comes to mind, that the gentleman filed his claim with the help of the adjuster and an attorney. So the adjuster referred him to the attorney. The attorney started basically filed the claim for him to his insurance company. Roofer came out, gave him an estimate. Total loss or total claim to the insurance company was $80,000. But the roof itself, to repair or to replace the roof, was maybe 42,000. The rest of that went to the public adjuster and the attorney. So it's very lucrative business. They made some changes in that marketplace to stop that or to reduce the occurrence of it. But no, we had that scenario happen, and we had insurance companies, homeowners insurance companies, basically leaving the state of Florida pretty much as fast as they could, or going out of business, because those claims made their non-reinsured losses just ate the insurance companies up. And so you've had farmers, and I mean, farmers dumped. The number I heard was 60,000 policyholders onto the marketplace. So that's a huge number. So that's why you were hearing those numbers as far as those weekly policy counts. You had other insurance companies go out of business because of the legal aspects of what they basically refer to as legal fraud. But if it was fraudulent, they would have, you know, violated a law. So they weren't violating a law. Those people were attacking a flaw, if you will, in the policy, and to the advantage of their client, that's their job. So it severely affected the homeowners market. There are some steps that the state legislature made to basically make it a more insurance company friendly marketplace, both on the property side for the homeowners and the liability side for general liability. But it is not a perfect market yet, and we need to still take some steps to improve our homeowners and commercial property market. And a big part of that is going to be some form of reinsurance, probably backed by a citizen's reinsurance or something like that. But we have to make it somehow appealing for an insurance company to come to the state of Florida and do business.
I mean, if we have one more Ian type, let's just not even Ian, let's just go half Ian type event,
Mm-hmm.
we've got to be looking at federal bailout, right? Like it's going to completely. It feels like we're like right on the edge, and if one more thing happens, we're just going to jump off the cliff and die. Is that kind of? I mean,
No,
am I right or am I over
no,
exaggerating?
no. I mean, like if you look back, I think it was '05, '04, '05. We had, I think the number we had like Francis, Jean, Irma. I mean, we had a batch of them hit the state of Florida, like within a 3 month period, basically one season, and then the next season we had stuff hit us. So, um, hang on one second, I'll just look up something real quick. Yeah, Irma 20, no, excuse me, Wilma back in 2005 was $29.1 billion. Some of that was crop damage and things like that. Francis and Jean Francis 2004 was 15.7 billion. I mean, this all happened within a 24-month period. So no, I don't think we would need a federal bailout. I think what would happen is you would see, because the state of Florida is not a poor state from as far as what our government has been able to do and the money they make from us taxpayers, and from the policyholders, because there is a tax paid on all your policies that you purchase. Um, that those taxes would probably go up, and they would need to do what they did back then, which would be a step up from like by citizens to shore up the marketplace and basically, again, make it an insurance company friendly market. It took a couple of years for that to get resolved, but it was successful, and they just need to take some of those same steps again.
I want to wrap up this Ian part with one final thought that I had never really given much thought to be honest, about roofs in particular. Um, it was from that CBS YouTube video that I watched, the special report, and he brought up a good point that I never really thought about. You know, when you insure a car, let's say that's a 10-year-old car, what would that be, a 2013 model, right?
Yeah.
And you crash that car, you're given the replacement value of that car after, considering its depreciation, the current blue book value or whatever, right?
Yes.
And I guess there's a debate that roofs in effect should be the same way, but the way it is now, you just basically get a whole brand new, 100% replacement cost of the roof.
Yes.
Uh, talk about that.
Well, it's funny because I was talking to a gentleman who's one of the principals at Atlantic Pacific Insurance, Greg Beal. He's been in the insurance business about 15 years longer than me. So he basically said, "Yeah, I can solve the homeowners insurance situation in a hurry. Make all policies actual cash value. So you're going to get cost of replacement minus depreciation. So yeah, that would change things, and that would make it more appealing. But in order to be competitive in the homeowners market, you have to offer replacement cost on the building. Well, they need to charge a higher price for that if that's the side of the coverage that is beating them up. So yeah, it's just part of it is they have to have the coverage written in a way that's advantageous to the insurance company, so they can stay in business. Not so advantageous to the insurance company that it's a detriment to the customer, because then it won't be approved by the state of Florida. But
Do you envision, as a result of all of this, of what's going on, because I feel like we kind of see this a lot in politics over the span of history, rather. Do you see that there might be an overcorrection to where it might be actually harmful to the customer for a period before it centers back up? Do you understand what I'm saying?
well, right now this is your overcorrection. Right now, the hard market is a situation where you've got insurance companies saying no, because 2 years ago or a year ago, you were seeing wind deductibles, and we do it in a percentage deductible here in Florida, but you were seeing wind deductibles at 2%. To be competitive, insurance companies were coming in, no, 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 we'll write that with a 2% wind deductible. Then you all went up to 5. Now you've got, if you can get a 5% wind deductible, you're lucky. And then on top of that, now the insurance companies are saying, in order for me to renew that, I'll do a 10% wind deductible. And I've got some banks that are balking on that. And I go back to their bank and I said, hey, if you can find a better deal on that, go ahead. And the banks are coming back to me and saying, you're right. We can't find a better one either. So That's the situation. So the knee jerk reaction by the insurance companies is right now in your hard market. The reaction by the state by making it so appealing to the insurance company, one of the, well, depending upon which side of the equation you're on, uh, the personal injury attorneys, the trial attorneys right now, they're, the state of Florida just made the ability as far as construction defect lawsuits. Used to be able to go out, what they call the period of repose was 10 years. Now it's 5 years. So it is a changed legal market. They're doing what they can to make it an appealing state because we're paying some of the highest premiums in the country in the state of Florida.
Yeah.
There's a cost of living in paradise.
Yeah, that's right. All right. So I want to wrap up, Paul, and I want to bring it back to, buyers and tenants and building owners. What are some, I'd like you to discuss maybe what are questions that you wish, those types of people asked you when they were getting their policies that they don't ask? What are some, when they fill out these applications, what are some red flags that might pop up? That they may not know are a red flag, best practices, that kind of stuff. Let's wrap up with that.
Well, one of the items, if they're a building owner or landlord, one, make sure they've got loss of rents coverage. Also, have an idea on what your tenant is doing inside their locations. Be careful
Sure.
about who you rent a place to because
Sure.
that can affect your insurance and what insurance companies are willing to write your policy. So if you've got somebody that has a hazardous operation doing business in your building, and that could be a problem. So that's item one. Loss of rents coverage is extremely important. And then the other side is don't forget that pollution liability because of the potential of your tenants to cause you a problem. And then the other side for a tenant, or excuse me, for a landlord on commercial property is have an attorney review your lease and update it and have him think about the insurance from the standpoint of contractual risk transfer, having the tenant cover you first as a landlord before your insurance ever kicks in. And that can be very simply done in the lease and the indemnification hold harmless agreement in there, what's required by the insurance, and then the additional insured endorsement by your tenant basically gives you a shield before your insurance is ever touched. So your insurance as a landlord stays pristine. So that's the steps that they need to take in advance of getting a tenant.
I want to get back to the pollution thing a second. So are you saying that a landlord should have in their lease that the occupant, the tenant, should have some kind of pollution coverage in their policy?
Well, it depends on the situation. So as a landlord, you can be held or at least sued in the event that there is a pollution event on the policy, or excuse me, on the premises, to where, and it can be driven by your ventilation system, HVAC system, a contractor that comes to your premises. So, as a building owner renting to someone, lesser's risk exposure, I do recommend pollution coverage. Now, as far as requiring it of their tenant, depending upon their tenants, it can be very important to have.
Now, how, uh, maybe I don't know if I'm asking this right, or I know it just seems weird because remember the research I pulled up said a lot of policies don't cover pollution. So how does one underwrite pollution coverage for a company that would be a potentially known polluter? Am I saying that
Well,
right?
oh yeah. Well, all right. So let's say you have, you deal in toxic material. As an
Right.
example, so let's say you're a building and storage lot, commercial storage lot, meaning that you rent your storage facility to, let's say, crane operators and heavy equipment companies, where they have equipment that they just don't have commercial space to store in their location, so they need a secured storage facility for their, let's say, cranes and paving equipment, things like that. So they'll keep those at those storage yards. Those storage yards need to have a certificate of insurance from those tenants with pollution liability for that equipment, because that equipment is carrying hundreds of gallons of diesel fuel and hydraulic fluids and all that fun stuff. And then the landlord himself needs to have a pollution liability policy. Or as in another example, you get somebody that's leasing space as a car dealer and they have a fuel tank on the premises,
Right.
so they can gas up their cars before they, have their customers go away. Or they have waste oil storage facility for their service facility. Pollution's built is every day, everybody's life. If you drive a vehicle, especially, or drive any heavy equipment, it's there. And then the tenant or the business owner that's in that building location as a tenant, as it has an exposure, plus the building owner has an exposure because of his tenant. And to completely depend upon coverage from your tenant, it's there, but it's unwise to just leave it at that. I would,
No, I get
and
it. Sure.
it's not going to be a huge dollar amount.
All right, Paul, but we need to wrap up. If people want to learn more about insurance or get quotes from you, how do they reach you?
Reach me by going to my cell phone. Best number to reach me at 561-452-3976 on 24 hours a day, 7 days a week. And then also you can reach me by email at pfinley, Finley. So that's P for Paul, Finley at apins.com. That's my email.
Now, for those of you listeners out there, you can also find Paul on LinkedIn, and I'm happen to be on his profile now. And I'm very curious about this banner that you have it looks like a Hulk with a dolphin logo on it.
Yeah, big Dolphins fan, man.
And what's the Hulk got to do with it?
Huh, what?
That's just a football player or something.
It's what we wish our Dolphins were, man.
I get it. So it just caught my eye because when I competed in Brazilian Jiu-Jitsu, my fight nickname was Hulk.
There
So
you go. There you go.
it was.
No,
I
I've
just
been
thought that
down here
was
in the
funny.
South Florida market. I've lived here obviously all my life, and so I was a little kid when the Dolphins went to their first Super Bowl, lost to the Dallas Cowboys, went to their second Super Bowl, and had the undefeated season, and then their third Super Bowl, which was the next year, and they won that one. So
Now, I got to ask, when the Bucks went to the Super Bowl, what was it, 2 years ago? Did you root for them or not?
oh yeah, I root for all my
You did.
Florida.
Okay. All right. So you stayed with your state. I mean, that's respectable.
Yeah, do what I can.
All right, everybody. That's going to end our coverage for this episode. Stay tuned. We've got lots of great content coming out in the future. For now, we'll see you later.